Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. It's a positive start to the week on DalalStreet. The sensex gains over 250 points. The nifty up over 80 points. IT, metals and select financial stocks lead the rally today. JioFinancialServices marks the first listing from the Reliance Group in close to 2 decades, lists at 262 rupees a share with a market value of about 1.6 lakh crore rupees, making it the second largest non-banking finance company in India. Titan acquires an additional 27% stake in D2C jewellery brand Caratlane for over 4,621 crore rupees, takes its stake to over 98%. The deal marks the second largest exit for an e-commerce founder after Flipkart founders sold their stake to Walmart. CAG audit report reveals 93% routes under the Udan scheme failed to sustain operations beyond the 3-year concession period. 52% of the routes did not materialize at all. The report directs for an audit of the Regional Air Connectivity Fund Trust, also highlights that there hasn't been an audit of individual airlines on Udan since 2018. Sun Farmer's Dilip Sanghvi says private equity companies are becoming important players in the pharma sector, but adds that Sun Farmer's size prevents any large transaction. Sanghvi expects specialty business to drive growth. That is a Money Control exclusive. Medical Commission bars doctors from participating in seminars, workshops or conferences sponsored by pharma companies or the allied health sector, also bans them from accepting consultancy fee, honorarium from companies or corporate hospitals. Doctors flouting the rules could face a 3-month license cancellation. Prominent wholesale markets in Maharashtra protest against the government's decision to impose a 40% export duty on onions as prices soar. Farmers call the government's move premature, seek relief. ISRO releases new images of the surface of the moon as the VikramLander gears up for touchdown on the surface of the moon around 6 p.m. on the 23rd of August. This is the first attempt by any country in the world to land a rover on the south pole of the moon. Well, those are the top stories that we are tracking this evening. The government has decided to impose a 40% duty on exports of onions, and this will be in place till the 31st of December as rising prices have sparked fears of inflation. Remember, vegetable prices have seen a surge of over 37% between June and July. Government-owned cooperative NCCF will sell onions from its buffer stock at 25 rupees a kg in Delhi NCR across prominent wholesale markets in Maharashtra. Meanwhile, there is a protest against the government's decision to impose a 40% export duty on onions as prices have moved higher. Farmers have called the government's move premature. And joining us now to take this discussion forward is Rohit Kumar Singh, the Consumer Affairs Secretary. Mr. Singh, always a pleasure. Appreciate you joining us here on CNBC-TV18. The last time you were here, we were talking about tomatoes, and that quite literally had left consumers in tears. And now it is the turn of onions, even as the heat on tomatoes continues. I want to understand from you where things stand as far as onions are concerned. The government intervening now by way of offering consumers the price of 25 rupees a kg. Take me through the procurement process for this.
So like you said, I promised you in the last interview that we will handle the tomato situation, and we have been able to handle it well. If you see, the prices today of tomatoes have really fallen both in wholesale and retail mandis, and NCCF is selling today at the rate of 40 rupees per kg. So I want to assure you that for onions, there will be a similar containment, if at all there would be any, in terms of inflationary trends. And procurement for buffer is a regular process. We already have 3 lakh tons of onions in our buffer, both with NCCF and NAFED. And we've asked them to procure 2 lakh tons more, and that will benefit the farmers. So there is no reason for worry for farmers, and the stuff which was going out of the country in form of exports. So the export duty, which your news item mentioned, will put a check on that, and it will improve the affordability and availability within the country.
Yeah, let me just address that issue, sir, because what we are seeing across mandis in Maharashtra, trading coming to a halt as farmers protest against this imposition of a 40% export duty. As you said, the government intends to up its procurement, but at what price are you going to be procuring from the farmers? Farmers at this point in time are saying that, look, this is a premature move on the part of the government because prices actually hadn't run up as much for this intervention to have been made in terms of an export duty. How do you respond to that?
So I don't think it is premature. Prices were going up, and if you compare with last year at the same point in time, we are up by in excess of 10%. In terms of seasonality of onion prices, this is the high price season, and the prices usually every year go up from here. So this year, although the production of onions has been similar to that of last year, but there is issue pertaining to the quality and pertaining to the content, moisture content in the onions. So as you would appreciate, when there is more moisture content, the perishability becomes higher, and the process of storage also becomes complex. So in order to avoid any unprecedented rise due to this whole issue of perishability, we have decided to take this step, and nobody will be made uncomfortable here. The procurement is not done at a prices which are below the market prices. There is a formula adopted by NCCF and NAPED, which is based on the modal price, and it always provides comfort to the consumer. In fact, to the farmer. In fact, you may recall that in the end of February this year, when the prices had really crashed, we intervened through NAPED and NCCF in the Lasalgaon market and provided relief to the farmers. So farmers' interests are primary, and they will never be compromised. But for the consumers, the prices would not be allowed to increase beyond a certain point, but in addition to the seasonality factor.
I'll come to what beyond a certain point means, Mr. Singh, but let's address continue with the argument as far as the farmers are concerned, because you said that the decision is now to procure another 2 lakh metric tons. What is the time period that you're looking at in terms of that procurement? And based on the formula, what would the average procurement cost per kg be?
So average procurement cost is never to the discomfort of the farmer. It is what is prevailing in the mandi in last few days, and then we have a system of calculating the modal price. So it does not hurt the farmer at all. And to answer your other question, the procurement will start now, and it will continue till December, when we reach the figure of 5 lakh tons as buffer.
Okay. Like we saw in the case of tomatoes, you are going to be offering subsidized onions as well. Again, a similar pattern. How are you identifying the regions where you will be putting out these subsidized onions in the market? And for what period do you anticipate having to do this?
So, if you realize the primary objective is to provide relief to the consumer. So as long as the situation demands, like we are doing in tomatoes, and I would like to tell you here that due to our nudging, and of course due to increased arrivals at different places, the tomato prices have really come back to almost normal. And we would like to do the same for onions as well. And we would like to nudge the market in the right direction so that the traders do not take unnecessary advantage of this. Because, when times are difficult, there is a tendency among some of the traders to take advantage of the situation. And you know it better than I that prices of these commodities, especially those who are perishable, is not just a function of demand and supply, but it's function of, the messaging and the other parameters that we have. So government has to be acting cautiously and try to nudge the market in the right direction.
Right. On tomatoes specifically, as you said that, first week of August was when you had anticipated that we would start to see additional supply coming into the market, and we have now started to see prices cool off. What is the average price as of today nationwide? And do you believe that there is a need now to completely wind down intervention as far as tomatoes are concerned?
So let me read out the numbers in the major markets today. So Delhi, which was, I'm just comparing figures of 13 July and 20th August. Delhi used to be 200 to 240 retail, I'm talking, it's 50 to 70 now. Lucknow used to be 160 to 180, it's 60 to 70 now. Varanasi used to be 160 to 170, it is 50 to 70 now. Kanpur used to be 170, 180, it is 60 to 70 now. And Jaipur used to be 180 to 200, it's 50 to 60 now. So you see the retail prices are now in the range of 50 to 70 in the major geographies. And correspondingly, the wholesale is also in the range of 40 to 45 in most of the geographies that I just mentioned. So this is how the constant nudging and adding supplies to these pain points, government has been able to manage to bring down the tomato prices.
So no requirement for any further intervention and a complete winding down of the measures that were undertaken for tomatoes specifically?
So as I said, we watch the situation every day. Until absolute normalcy is achieved, we will continue to intervene because the primary objective is to provide relief to the consumers from this unnecessary volatility of prices.
So both on onions as well as tomatoes, in terms of tomatoes, where do you feel the need to intervene at this point in time? Which are the regions geographically that you feel the need to intervene at this point in time? And on onions specifically, again, which are the sectors, which are the regions that are most vulnerable to the kind of price shock that we've seen?
Also, onions, we've already started intervening both in wholesale and retail. Wholesale, the intervention started 4 days back, and as we speak, we have already infused 2,500 tons in various markets in Telangana, Andhra Pradesh, Guwahati, Delhi, and Himachal Pradesh. And the retail starts in Delhi today. It has actually already started at 25 rupees a kg. So we're trying to handle the problem from both directions, adding more supplies in the wholesale market at the market-driven prices, and providing relief to the consumers by providing 25 rupees a kg in retail. So I think this double-pronged approach will probably help contain unnecessary rise in the prices.
My final question to you both, if you could give us a quantum on the supply side measures that you just spoke of, as well as what you're hoping to do by way of the subsidized onions that will hit the retail market. If you can share with us the quantums before I leave you.
So, as I said, in last 4 days, we have infused about 2,500 metric tons on the wholesale side. And on the retail side, our approach will be very calibrated, and we will see how the market behaves. But the objective is that we will not let the consumer down, and it's all about providing relief to the consumers for these commodities, which are essential components of our kitchen.
So no tears, hopefully, this time around on account of rising onion prices. That is the hope and the belief of the government as it intervenes in the onion market as it did to bring down tomato prices, which, according to the Consumer Affairs Secretary, are down almost half in comparison to the highs that we saw for 150 to 200 rupees, now down to between 50 to 70 on an average across different parts of the country. Mr. Singh, always a pleasure. Appreciate you joining us here on CNBC-TV18. Thanks very much for your time. That is the Consumer Affairs Secretary on the government's measures to try and cool down onion prices. But speaking of onion prices, farmers in Maharashtra, as we were pointing out, are not happy about the government's measures to bring prices down. Santiago reports that farmers are terming the government's actions premature and one that hurts their pockets directly. But you just heard the Consumer Affairs Secretary saying that A, the government intends to procure more. There will be an additional procurement by the government, and hopefully that should allay some of the concerns that farmers have. Take a look.
इतना नुकसान हो जाएगा तो इसको खरीदेगा कौन? हम लोग क्या करेंगे? छोटे छोटे बच्चे हैं हमारे पास।
शेतकरी सिर्फ ये वादे में रहते, उम्मीद लगा के बैठते आणि आगे कुछ नहीं होता।
100% से 80-90% तो खराबी हो गए।
For 72-year-old Vishwanath Bodke from Shimpi Tankli village of Maharashtra's Nashik district, the next few months don't hold much promise. His onion crop was largely destroyed by unseasonal rains, and subsequent heavy rainfall and recent hailstorms have meant that any crop he managed to salvage has started rotting earlier than usual. Farmers like Bodke were hoping the rise in onion prices would offer some support. Since the last week of July, wholesale onion prices in mandis in Maharashtra improved from 14 to 17 rupees per kilogram to around 18 to 22 rupees per kilogram, mainly due to a demand-supply mismatch. But this rise has not helped much because it's still not enough to offset the cost of the destroyed portion of their crop.
हमारा 100 क्विंटल कांदे था, 100 क्विंटल में अच्छा कांदा कितना निकला है? 10 क्विंटल। मैंने कितनी 90% कांदा खराब हो गया। ऐसा मेरा सरीका 150 खेती का किसानों लोगों का है।
The government, however, is worried rising onion prices will pinch consumers, especially since tomato prices have already crossed 200 rupees a kilo in many pockets. Keeping multiple price forecasts in mind, the government has decided to release 3 lakh tons of rabi onions into the market. The government claims this will help keep onion prices in check and will bring relief to people who are still paying huge amounts for tomatoes. But the farmers say the government is acting in haste. Maharashtra produces 43% of India's onions, and a large portion of this crop was destroyed. What was salvaged has also begun rotting earlier than usual, with even traders having access to modern storage facilities saying they are struggling to prolong shelf life. Experts claim that 15 to 20% of rabi onions that was in storage has already rotted away, and peg losses from this at around 500 crore rupees. In this scenario, farmers argue that government action to depress prices will only result in higher losses for them.
सेंट्रल गवर्नमेंट जो नफेड और एनसीसीएफ का प्याज है, ये प्याज मार्केट में अभी अगस्त में उतारने का जो टाइम है वो गलत टाइम है.
But some say this preemptive action is needed.
It's really painful and unfortunate for the farmers, but to ensure that the retail consumers don't feel the heat, the government had to intervene in the market, because if traders would purchase it at a higher price, then the higher prices would only reflect in the retail market.
For now, Maharashtra's onion farmers are reconciling themselves to further financial losses, especially because they are still waiting for the compensation promised to them by the state government in March. In Nashik, Santiagora.
Well, that is the story we're going to be tracking closely here on CNBC-TV18. It is time for us to head into a break, but up next, Titan acquires an additional 27% stake in D2C jewellery brand Caratlane for over 4,621 crore rupees. Takes the stake to over 98%. That and more when we return. Well, let's give you a snapshot of the market action today. It's been a positive start to the week on DalalStreet. The Sensex gained over 250 points, in fact, to 67 points higher for the Sensex. The Nifty was up by about 83. Nifty Bank closing 150 points higher, and the Nifty Mid-Cap up over 300 points. So that's the story on how the markets panned out for this afternoon. But let's talk about the big listing. JioFinancialServices making its debut on the Indian bourses today as India's second largest listed NBFC. Now, shares listed on the stock exchange at the price of 262 rupees a share, with a market value of about 1.6 lakh crore rupees. That's KV Kamath talking about the listing.
JioFinancialServices will seek to optimize all that India provides. India is in a growth momentum like what we have possibly not seen. The team will endeavor hard starting today, as it were. They have been working for the last 5 or 6 months, but starting today with the listing, they would endeavor to work even harder to achieve what we have set out to do. and be an important player in the financial services sector of this country.
KV Kamath there on the JioFinancialServices listing. The standard disclaimer on your screens. Network 18 and TV18, the companies that operate CNBC-TV18 are controlled by Independent Media Trust, of which Reliance Industries is the sole beneficiary. Well, from a listing to the big exit in the D2C space, Titan has acquired an additional 27% stake in jewellery brand Caratlane for over 4,600 crore rupees. This will take the company's stake to over 98%. The deal marks the second largest exit for an e-commerce founder after Flipkart's founders sold their stake to Walmart. Mangalam is standing by now to take us through the details. Mangalam, Titan invested first in Caratlane in 2016, and now it's an exit for Mithun Sacheti, the founder of Caratlane, at a deal valued at over more than 4,600 crores. Take us through what this means for Titan.
Well, with the kind of growth that Caratlane has shown, it seems like this deal was one, imminent, and secondly, you pay some price today, then pay a much higher price, say, a couple of years down the line. And that's what the street is taking, and as a result of which the stock too has moved to the high point of trade. But first, the news: they bought about 27% stake in Caratlane, additional 27% stake for a little over 4,600 crore rupees. And for perspective, between 2016 and 2019, they acquired 71% stake for a cumulative investment of around 400 to 450 odd crores itself. So what they're paying for 27% is in absolute terms 10 times more than what they paid for 72% itself. But then again, Caratlane has been growing over 70% CAGR in the last couple of years. At the same time, the company's turned profitable on an EBIT basis as well. Margins at around 5.5%. Earlier it was a negative. And at the same time, with 75% revenue coming in from studded share, the street believes that they can increase their margins as well. We posed the same questions to the company as well, and the company said that they are confident of the value that Caratlane brings to the table. Importantly, Caratlane has been growing at a 50% CAGR historically and expected to grow faster than the overall portfolio of Titan as well in the future. And at some point, Caratlane's own margins, which are currently 5.5%, will cross Titan's jewelry margins as well. So if that were to happen, then there would be further value accretion too. How would they fund this deal? 4,600 crore rupees. Well, they have cash of around 3,000 crores, so they will have to take some debt. But Titan's market share in the jewelry business is around 7%. Caratlane is slightly under-indexed with 6%. So there is an additional kicker for growth coming in here as well. And no plans for listing Caratlane separately. Were that to happen, maybe the street would have worried that, okay, there would be a holding company discount factor playing out as well. But no, that's not the case. And as a result of which, we saw the stock move higher.
All right, Mangalam, many thanks for joining us. And you can catch a special interview with Mithun Sacheti, the founder of Caratlane. That's coming up at 5 p.m. and 9:30 p.m. right here on CNBC-TV18 on a special edition of Young Turks. Moving on, it's been a slow takeoff for the government's Udan scheme. A CAG report has highlighted that more than 50% of the routes awarded under the Udan scheme have unable to commence operations. Only 54 of the 774 routes have even managed to sustain operations beyond the 3-year concession period. Danish is standing by now with the details. Danish, take us through the concerns that have been flagged now by the Auditor General.
The performance of the Udan scheme has become a big political issue between the opposition and the government. The CAG has assessed the overall performance of the Udan scheme from 2017 to Udan 3.0, that is till March 2023. The CAG audit has revealed that only 7% or 54 routes have managed to sustain operations beyond the 3-year concession period, and 52% of the awarded routes were unable to commence operations. The CAG audit has also highlighted that there have been significant delays in revival or development of airports under the Udan scheme, and operations have commenced in only 71 out of 116 identified airports. Further, the CAG report has suggested audit of Regional Air Connectivity Fund Trust accounts as rupees 600 crores are lying idle, and also an individual audit of airlines has been recommended. CAG has recommended that there should be a new mechanism to assess the feasibility of routes and identification of unserved airports in a more effective manner. Further, CAG has also recommended a new mechanism for identification and feasibility of heliports under the Udan Regional Connectivity Scheme. Well, the Aviation Ministry has also been asked to explore a mechanism to monitor the Regional Connectivity Fund levy collected by the airlines, and a suitable mechanism should be devised to reconcile the viability gap funding claims lodged by the airlines.
All right, Danish, many thanks for joining us. That is the CAG flagging concerns with regards to the Udan scheme. The Civil Aviation Ministry likely to respond. The big newsmaker this evening, Sun Pharma's Dilip Sanghvi, says that private equity companies are becoming important players in the pharma sector, but also added that Sun Pharma's size prevents any large transactions. Sanghvi expects specialty business to drive growth for the company. He also spoke about succession planning at Sun Pharma. Sanghvi is leaving the decision to his son and daughter. Take a look.
Our size in India business prevents us from pursuing any large transaction because we will have significant product overlap with most of the companies. But I expect that there will continue to be transactions because the viability of future businesses will require some minimum size. Both my son as well as my daughter are actively involved in the business, but philosophically I think that's a business decision that they need to take, that they would like to be owner managers or working managers or would like to take a hands-off position. We have very good professional management team, so I am comfortable that the company will continue to do well and grow.
Well, that's a rare interview there with Dilip Sanghvi of Sun Pharma, owner, manager, or working managers. That will be the dilemma for the next generation of the Sun Pharma family, the Sanghvi family, as they look at succession planning. Well, with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news will continue. You can find us on Facebook, on YouTube, on Threads, on Instagram, and on X as well. We will take a break. We're back in a moment with more.